The advance decline indicator, also called the advance decline line or breadth indicator, provides a general idea of broad market sentiment. It does this by providing a ratio for a given market, such as the New York Stock Exchange. The ratio is formed by comparing the number of stocks that increased in value to the number of stocks that decreased in value. The magnitude of the advance or decline is not measured, rather just whether it is an up or down day for each stock. This way, stocks are equally weighted based on whether they went up or down, and not the magnitude of price movements or market cap. Such unequal weighting often skews an index, which can be disproportionately affected by larger cap stocks or movements from certain stocks. The value of this indicator is a cumulative number. It continues from day to day based on the previous day's value, combined with the value of the ratio on the current day. If you want, you can easily find the calculations for the values that are displayed. The main focus of this series will focus on practical real-world application of the indicator on a variety of charts. So no matter when you watch this or which charts you choose to apply the indicator on, the general knowledge from this series of examples will be of use to you.